Reddit stock is absolutely ripping in the after hours after it was announced that they're going to be included in the S&P 500. So that's just one of the catalysts actually coming to fruition. And we can see that Reddit is actually going crazy over this news. Let's dive into the numbers and see why they dropped in Q2 and see if they're still undervalued. Their daily active uniques increased 18% year over year. And I'm going to say that this was the reason why they dropped so much in Q2. It was the daily active uniques in the USA. So we can see that the daily active uniques in the USA was only at 6% growth. However, we can see by the revenue growth growing 61% year over year, which is the 8th consecutive quarter over 60%, and the net income growing, doubling year over year, the EBITDA up 106% year over year, operating cash flow up 135% year over year. Like, they're growing like crazy. Wall Street was just worried about this daily active unique in the USA growing slower than expected at 6%. The daily active uniques globally is growing at 18%. The reason why Wall Street doesn't like the USA growth slowing down is because the average revenue per user from the US is much more valuable than an international user because they just spend more money basically in the USA. ARPU is at the very bottom. It says ARPU in the US is growing 51% since last year. They're making way more money off each user. And then we see international. This is where they need to grow. But we see that it is growing at 31% year over year. The next catalyst we see is negotiating better AI licensing deals. They need to win their lawsuit against Anthropic. And another catalyst that was part of my thesis in Reddit was inclusion of the P500. So they'll be included on August 18th. We can see here that the Reddit website is the 6th most visited website, and it's only a 34 billion. Maybe it's different from this picture, but it's a 34 billion market cap, and we can see by all their competitors here they're much bigger. Where I bought, so I bought at 139 after the Q2 earnings report. You can see on Robinhood Legend here, I bought right around here at 139. And it was at 180, and it dropped all the way down to 139 after Q2 earnings. And now we're trading at 176 in the after hours. It was at 158 at the close. So it went up by $25 or 11%. We can look at the rule of 40 is 90%. So anything above 40 is considered high growth and high profit margins. So we can see 90 is very good. Their debt to equity is 0.01, meaning they don't have much debt at all. They have absolutely no debt, pretty much. And their return on invested capital is 43%. Their enterprise value is 26 billion, and their market cap is 30 billion. So they actually have more cash on the books than debt, 4 billion. Profit per an employee is at 340,000 per an employee. So that's a lot of profit per an employee. We can see the rule of 40 is growing, and we can see the stock price and the PE ratio. PE ratio is declining as well as the stock price. Revenue. So this is the revenue waterfall chart. It's a fun thing to look at. You can see 2.8 billion of revenue. The cost of goods sold is 240 million. Which means the gross profit is 2.5 billion. So that's like 90% gross margin. And then 1.8 billion in operating expenditures. So like what it costs to run the business, paying employees. Operating income is 785 million, and other income such as the AI licensing deals is 86 million. So it's that 86 million is really small part of the business, but it has room for growth with the AI licensing deals. So that makes net income 870 million for a PE ratio of 35. That's what I set it to. You can change it right here if you want to. Also, you can see that you can already see my price target for the stock is $265, which I do 3 discounted cash flow models to see the bear case, bull case, and base case. You can see the revenue growth is growing really well in that teal colored bar. The gross profit is growing as well. Net income, everything is basically going straight up into the right. CapEx is just 7 million. It's a tiny part. They're hardly spending any CapEx. So we are seeing operating leverage. So that is awesome to see. So in 2024, we can see the gross margins were still 90%. Operating margins were negative. Net income was negative. Free cash flow is negative. And then we see all the margins turn positive in 2025. 20% operating margin, 24% net income, 15% free cash flow. And we see it keep on going up and to the right. So what I want to see in the bull case scenario is operating income, operating margins go up to 40%. Tangible book value, basically their cash is going up and to the right. Net debt is going down. Operating income going up. All those things we love to see in our stock picks. Year over year revenue growth. This is the historical financials. These purple line items right here are what we were going to use in our discounted cash flow model. So we see 60% revenue growth just all over the board here. This is Q2, so Q2 was 61%. In my bull case scenario, I'm picking 25% revenue growth after 5 years. I'm making the operating margins 40%. So Meta actually has operating margins of around 40%. So I feel like that could be our goal for our bull case is 40%. Plus those AI licensing deals that's added into Reddit stock. We can see that the free cash flow margin, we can see 681 mil in free cash flow. We have to subtract the stock-based compensation, but we do see it's the biggest it's ever been, 681 mil, and it's going up. I think for the 6th most visited website, we can put a 35 EV to EBIT multiple. Right now it's a 41. So maybe we can change it to 30 because that's where it is right now. But we probably would expect there's a lot of risks that Wall Street is thinking about right now. It's like, oh, if they don't get a deal done with Google, then how are they going to get new users? But doesn't Google use Reddit as their source a lot of the time in Gemini? If they don't have a source, then their data is going to be old. I think that is kind of BS. So we should just assume that they're going to get a deal done. And I think Reddit has the leverage in that because Gemini wants the best model with the most up-to-date data. So I'm going to change it back because I'm bullish on it, right? For our base case, we're going to put 20% revenue growth, 30% operating margin. We can see it's already at 28%. So that's hardly taking into account any more operating leverage. It's like basically saying they don't get any of these AI deals done and things is just business as usual. Then I put 24% in the free cash flow. Free cash flow is basically what the business gets after everything is paid for. It's what they can do to either buy back their shares, pay out dividends, or pay down debt. So 25% free cash flow margin and a 30 EV to EBIT multiple. And we would see after 5 years, we still make double our money or 15% IRR, internal rate of return. So the S&P 500 usually gets you 10% IRR. So even in our base case, we're getting 15%. In our bear case, we're assuming 10% revenue growth and a slight deceleration in our operating margin and deceleration in our free cash flow margin and a EV to EBIT compression to down to 20, about half of what it is right now, TTM. So that means you would lose 12% every year you hold this stock, and you would become a bag holder, a PlusEV bag holder. Okay, $93 fair value right now with these assumptions. So with these assumptions in mind, we can see that a price of $178, we can see our IRRs right here on the screen. Let's go ahead and look at this right here. We can see our IRRs right here. Base case is 14.8%, bull case 29.9%, and bear case 12%. And we can move. The cool thing about this part of my website is you you can move your mouse over different prices to see what your IRRs would be. So if it dropped down to 140 where I bought the shares, you would get a 25% IRR with those assumptions if you blended the probabilities all together. So at a $178 share price, and I set the probabilities of the bear case at 20%, the base case at 40%, and the bull case of 40%. If you merge those together, you get a 19.5% IRR return on your investment. I got $265 as the fair value right now. So that's a 50% upside at the current price. Let's look at their competitors here. For fun, we can look at Meta and AppLovin. So AppLovin is crazy too. I love all three of these stocks. So I have no bias here because I like all three. Let's see, we got Reddit. Reddit gross margins is winning against these three. And their operating margin is losing to Meta at 38%. Also, Meta's free cash flow margin is being depressed because of their insanely high capex. But, their return on invested capital has been really great. So you can bet that they're probably putting that money to good use. Even though the metaverse didn't work out, it doesn't mean the future bets won't work out. The revenue CAGR, basically how much revenue growth they're getting, 49% versus Meta's 20%. It is the highest revenue growth of them all. But the rule of 40, you can see AppLovin is at 138%. So that is pretty insane. You can see by their high bars equals higher margins. And that's what we like to see. So if you just feel like looking at the stock, okay, we can see AppLovin has the best margins and Reddit has the highest revenue growth. And we can look at the valuation multiples. And if you want, you can turn on definitions and it should show you what these KPIs mean. Grows, its stock-based compensation will actually kind of go down as a percent of the revenue as it grows. So high stock-based compensation can dilute shareholders and reduce economic earnings quality. And then we got price to tangible book. Price to tangible book doesn't really apply for these companies because they all have like virtual assets. You want to look at tangible book when you're like assessing real estate or like loans and stuff like that. So free cash flow, price to free cash flow multiple, basically market cap over how much free cash flow they earn. We see that AppLovin has the best multiple on that. Basically, what you want to see is small bars on the valuation multiples. So I think Meta might win on the small bars aspect here. You can see by just like hovering over them. And then let's just move on to the how much profit per an employee each one of these companies make. These are really good numbers just in general. So I like all three of these businesses. So it's kind of hard to talk trash about them. And then you got more information here. So now let's look at, we can go to Reddit. Let's look at their short interest. We can go to short interest. They are actually shorted a little bit. They have a 13% short float. So I would look at the 13% short interest. So shorts might have to cover and buy back the stock at a high price. If we look at the monthly chart, we can see Reddit actually reached $260 where my fair value estimate is in the past in October of 2025. So you might be a bag holder from buying up there, but I think things are going well for Reddit. For now, let's go ahead and just look at the Reddit stock subreddit. This is an interesting stat. 98.1% of Reddit comments are human. That's good. And then breaking news, Reddit ads require no minimum to get started. Okay, cool. Okay, we see lots of that. See, like this was 7 months ago. or 7 minutes ago. This guy's basically saying even if daily active users may be affected slightly by AI summaries, the people passing by Reddit for quick answers are not the ones who contribute to growing ARPU. The people being monetized are those who are loyal to the platform with nowhere else that can replace what they're looking for. I agree with that statement. I never talked about the advertising quality. So the amazing thing about Reddit is how it can advertise something specific to the user, and they self-select their subreddits. So like if I select poker as a interest of mine, it's going to advertise me poker websites to play on, and those advertisers will make money from me seeing that casino to play on, and I'll click on that website, I'll deposit my money, and they're going to make a lot of money from me depositing on the website. And it's just very targeted, and that's how they're going to make a ton of money for these advertisers. Take over optionality, I doubt that I don't think anybody's going to be able to do that. So this guy thinks Reddit should trade at 500. When you bought into a stock for a quick flip, but it ended up being a community member? I hope that's not hurt stock for me. Nah, but if we want to dive into my positions real quick, Reddit is actually one of my biggest holdings at $10,000. I got $10,000 inside there. So that's my little signals, but I'm just a normal dude, so not a financial advisor or anything. Investment has a lot of risks. So I'm just a dude on YouTube. I got a W-2 job, and I enjoy picking stocks. I enjoy making money. I love poker. Join my Discord for $3 a month. Or if you want to pick stocks, you can also join my website for free trial. Check it out in the description below. So for my investments, I try to get above a 20% blended IRR. And I manage this through my portfolio tab. We can see that my portfolio rollup is 24% blended IRR. And I can see the most important numbers here is the blended IRR. And we can see that all of them are above 20%. And sometimes they will go under 20%. Let's say if the thesis is playing out and it goes to 10%, I might sell half of my position and keep the other half basically for tax reasons. If I sell, then I'm gonna have to pay more taxes. But if it's growing up and to the right, and there's kind of no reason to sell it because then I have to pay a 22% capital gains tax. That's where I manage my portfolio, and also I update my portfolio holdings right here. You can basically upload a picture from Robinhood and it'll update automatically if you want to do this for your holdings. And you can even share your holdings to like X relatively easily. Like you just click copy image and it'll copy all this to X. And these are my holdings right now. They are slightly delayed, so basically everything on my website's at end of day pricing, so they won't be live prices. It'll be the last end of market day. But we can see Reddit is a 13% holding of mine. These are both my Roth IRA and individual account into one. But we are up on almost every position besides AppLovin, and that is actually my highest blended IRR. So I'll be accumulating some AppLovin once I get more money. Let's see, my rule of 40 is 138 right there. And then if we go to the watch list, we can see all of my watch lists is right here. And it'll bring up also the blended IRRs. Basically, it'll take some time since it's pulling all of the inputs from the discounted cash flow models. And then we have the green KPIs. Basically, these are the things we like to see inside stocks. And we can see oversold. AppLovin's oversold. But yeah, that's then we can see trending stocks. This is how you can make really good YouTube videos, and also stock picks. You can see like, this is how I found Hertz stock. I saw it was #1 on trending stocks, and I was like, why is it trending? It's because of the short squeeze. So when a stock does squeeze, you can get like some insane, really quick returns. So we're just gonna wait for that thesis to play out. If it doesn't squeeze, it does have some good fundamentals behind it, growing 10% revenue growth. But we can see Reddit is gonna be right here, so that's why I think it'll be a good YouTube video. And obviously, I'm trying to make money from my website, and if my website makes some money, it does cost money for these KPIs and everything. So make sure to subscribe, try it out, the free subscription for 7 days, and you think in the comments below about Reddit stock and buying. What stocks are you guys going to be buying? Leave comments below. Thanks guys. Check out my YouTube video on Hertz.